Is it possible for a stock to be like a coiled spring ready to pop, but also maybe way, way overpriced at the same time?
Okay, that sounds like a riddle.
Right. Well, that's kind of the puzzle Fluence Energy, ticker FLNC, just gave us. It surged over 24% in just one day.
Wow.
Yeah, setting up this absolutely classic battle, fundamental value versus just pure market frenzy. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. So our mission today in this deep dive is really to cut through the noise around FLNC. Just for context, our research is based on data we pulled on October 2nd, 2025.
And it's important to set the scene a bit too, the macro environment.
Oh, definitely. It's messy out there. NASDAQ futures look, well, kind of bullish, actually.
But the Dow's lagging.
Yeah, struggling a bit. And then there's this huge storm cloud, right? The potential government shutdown.
Which could stop key data releases, like the jobs report. That creates a lot of uncertainty.
Totally. So with all that going on, seeing a hyper-growth name like Fluence just making its own weather, it's pretty fascinating. Okay, let's dig into the company itself. Fluence Energy. They're a big player, right? Building these massive energy storage systems.
Yeah, essentially the grid's battery pack. Huge scale stuff.
And they just got this, double shot of positive news. First, their main shareholder, AES, is apparently in talks for a potential $38 billion merger with BlackRock.
That's massive news. Just the association, the validation.
Right. And second, Fluence announced they've manufactured and delivered their first domestically made Smartstack energy solution.
Okay, both of those are actually strategically huge. They're not just minor updates.
How so?
Well, the AES BlackRock thing, even just the talks, it sort of puts this strategic asset label on Fluence, It underlines how important energy storage is becoming for big institutions.
Ah, okay. Long-term validation.
Exactly. And that's Smartstack news.
Yeah.
Making it domestically isn't just about, made in the USA. It signals they're streamlining production.
Which could mean faster deployments, lower costs.
Precisely. Speeding things up, dropping costs, that's absolutely crucial if you want to justify a higher long-term value.
Okay, but here comes the reality check, right?
Yeah.
This is where our analysis maybe gets a bit brutal.
Uh-oh.
If you look purely at the numbers, the financial modeling,
Yeah.
Our fair value based on future cash flows.
Yeah. Where does that land?
We get about $5.64.
$5.64? Wow, okay.
But it closed yesterday near $13.50.
Yikes. That's quite a gap. That's pricing in years and years of perfect execution.
Exactly. Extreme overvaluation by that fundamental measure.
It's the classic disconnect, isn't it? Calculated reality versus market euphoria. And Wall Street seems a bit cautious, too.
Yeah. Our research showed analysts are skeptical, about 65% rated to hold.
And you mentioned sell ratings have been creeping up recently, too.
That's right. So the analysts aren't exactly banging the table to buy here.
But, okay, let's pivot. Forget the long-term models for a second. What about the market's raw emotion? The trading behavior? Sentiment?
Yeah. This is where it gets really interesting. It's completely polarized.
How so?
Okay, look at the options market. The bulls are just overwhelming. The put-to-call ratio, it's super low. 0.36.
0.36. That's incredibly low. That means options folks are betting heavily on more upsides, right? Buying calls like crazy.
Almost 3 to 1. It's
Yeah.
aggressive speculation on the short term.
Okay, so extreme bullishness there. But what about the other side? The bears.
Oh, the bears are massive too. This number is just staggering. 33.88% of the available shares are shorted.
Whoa, hold on. Over a third of the float is short?
Yep.
An absolutely huge number.
Okay, so if you connect that to the rally,
Yeah.
when you have that many shares shorted, those traders, they eventually have to buy back if the price keeps climbing.
Doesn't matter the price at some point, right? They just need to close the position.
Exactly. Those trapped bears, that's potential rocket fuel. Pure and simple.
And the technical picture, the charts, seem to back up this immediate bullish feeling. Yeah, the price action itself is screaming, go!
Right.
And it's backed by a really big surge in volume, which suggests conviction.
Both short and long-term trends pointing up.
Aligned, yeah. Looks like a powerful move. Now, is it genuine conviction or just short-term frenzy? Right now, it looks like conviction.
But there's usually a catch, isn't there?
Always a catch. The big warning sign is momentum. A key gauge we watch is now flashing overbought. Meaning the rally might just be too hot, too fast. It could be due for a breather, maybe even a sharp pullback.
Okay, so pulling this all together, what's the final verdict from our research? For you, the listener.
It leans Cautiously bullish.
Cautiously. Okay, so we acknowledge the risks.
Absolutely. The risks are significant. You've got that extreme overvaluation fundamentally. You've got the overbought signal technically. And, the shaky broader market with the shutdown looming. Those are real concerns.
A bullish
Because right now, the immediate price action seems to be king. It's validated by the trend, the volume, the momentum, and the biggest factor tipping the scales bullish. That massive short interest.
The truck bears.
The potential for a short squeeze, that sheer buying pressure that could materialize, it sort of outweighs the immediate valuation worries, at least for the near term.
Got it. So for the next few trading sessions, what should people be watching? Key levels.
Yeah, definitely some key battlegrounds. The target, or maybe the confirmation level, is $14. If it breaks decisively above $14, that probably confirms the squeeze is really on.
Okay, $14 is the upside trigger. What about the downside? The O level.
A line in the sand. If it closes below $10, a close back under $10 would pretty much invalidate the breakout, suggests it failed.
14 up, 10 down.
Got it.
So Fluence Energy. It's this fascinating tug of war, isn't it?
Yeah.
Deep fundamental skepticism clashing head-on with just extraordinary market enthusiasm and, well, this massive short position.
For now, yeah. It feels like the shorts might be the ones sweating the most. They could get squeezed out of all their juice, as you said earlier.
Definitely one to watch closely. Keep an eye on those key levels, $14 and $10. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.